Hi, good morning. All right, let's get the charts where someone reminds me. All right. Okay. Yes, SPX. All right, starting SPX. Yesterday was spot on what we thought was going to go on, which was the consolidation day running in place, going nowhere, and eh, inside day, as you can see. So today things are up here a little bit, and we're going to see where things are at relative to these 2 days. And after the resting day, can it take out yesterday's high and keep going? Now, it's not the exact type of resting day that we like to see, meaning on the S&Ps here, it didn't take out yesterday's low. So it wasn't a correction bar for what we want to see as a continuation pattern. It was just an inside day, a resting day. And why we like to see the low get taken out is because we know there's going to be some stops there. And it kind of flushes out some of the potential supply that would come in should it move up. Is it enough? Well, we're going to look at the other markets and see. Now, as far as zero data expiration, so 45.55. There's some premium up there. I'm not so sure you want to go for that after a resting day. We always look to get how far away, and there's nothing above here. So, if this takes out this day's high, the 30th high, I think it could pop up there relatively easy. I'm really not comfortable with that. Futures are up here a little bit. I'd rather see things come down for a put spread to increase the premium. But 4,500, there's some premium there. There's an unfilled gap before it. It's a whole number. The market's overall bullish. And I think that is a relatively safe bet because you've got multiple lines in the sand, so to speak, of, I'm going to say defense lines as to the ability to hold things from going below that. Right? So that's what I would look for. Again, any kind of downside would increase the premium a bit down at that level. So that's what I would suggest you consider. And because yesterday was a corrective day, that upside one could be extra risky. All right, so let's see where the spiders are at. A little dip going on here. All right, so that 4,500 level, those premiums pop up there a little bit and maybe even going to 44.95. Now you got that whole number there. And so take a look at that 44.95 since things are pulling back here a little bit. And where are they? 40, 452, 452. So it's actually up above yesterday's high, but coming in, it went up to 453.60. Oh, wow. It was actually above this high here, which I suspect if this continues to come in here, a gap fill, right? So looking at the day chart, right? So this is what I call the day chart. It's not including pre-market or after hours. And let's see here. 453, 453.60 was up here. It's at 452.70. And this is something we're going to talk about in MT Live today, since it's about gaps. But pulling back into this area, you see this little double bottom type of price action here. Somewhere in here is likely where we should see buyers begin to step up. So as far as SPX goes, should it pull back into here, then you could look at that 44.95, and McGraw is telling me that 44.95, 44.45 is around 35 cents, which is okay for a 0-day expiration trade. And so look, you want to be safe, right? You want something that is essentially going to be a no-brainer type of setup, right? All right, so let's look at the futures. There's inside day. So you get the 24-hour price action there, of course. So it's a little different than S&Ps. And prior day's low was our first reference point of support, which you can see here's the little double bottom, which you saw on the spiders there. So we've got a little trading range going on and a rejection here from those highs. So running in place, another day of running in place. It's not what we want, for the intraday price action. We want some movement. It's early. We could be in, we don't know. We could be in for another resting day within a resting day, which would be okay for the credit spreads, of course, but not for the directional type of trades other than scalpers. Well, look, we look at this every day pre-market to see where things are at. We look at the futures to kind of, put together a probability bias of where things are at, which, like yesterday, I said, likely consolidation, let's keep us out of the frog in the blender, meaning the erratic type of price action that whips back and forth. So if you're nimble, there are setups to trade, but keep in perspective that, our bias that things are likely to not go too far. And so today may be one of those days where it goes even less further. Right? Put spread on IWM, I was asking me. I think it should be a no-brainer. You didn't tell me what strikes, but yesterday was a resting day, and I like this pattern. We cleared the highs here with an igniting bar out of a corrective type of price action there. We talked about this the other day. And so they're at 220, let's call it 227, which is up here. So I don't know what strikes you're thinking, but definitely have to be below yesterday's low. So up at 227. And, based on this price action, and this is what I was saying, that the S&Ps didn't give us the kind of correction bar that we would refer to as truly being a correction bar, not a resting bar, is that this took out the low. So it takes out some stops and it recovers. And so now we want to see this take this out, which it was up there, and now it's coming back in. We'll just have to, figure it out at the open and in the first, few minutes or so to see, whether this pre-market is just some whip back and forth and whether that can just take it out. But a put spread here, if you can get far enough away, should be a no-brainer for Friday. 222.50, 222.50. Well, so here's the thinking. You got the 50 MA there. Right. In that area, it's a little bit below. You got this congestion. We absolutely know, right, based on our factory work, that it shouldn't go below 224. Well, minor support is subjective because it's beyond what's directly to the left. It's about the halfway mark in the wide range bar. And you can see the void from the wide range bar here. And so this has created the support. as we define it by making a pivot, a lower low is just okay. It is okay. There's nothing wrong with making a lower low within a void. It's actually, we actually like it a bit better. So 220, 226. We're still okay. We're still up above this area here. 222.50. Well, this is here. Ideally, it's going to hold here. And so if it starts to come in today, let's say it comes down to this low, buyers should be there. It's a pivot low. We look to the left. Buyers should be in that area of 224-ish. And if it pokes under it a little bit, that's all right as well, because it's a void, but it better turn around. 215 for next week. I don't know. Let's consider that tomorrow and see what happens here today. I mean, that's far away where, look, if it's going down there, something very wrong has occurred, based on what we saw with this correction bar reversal here in wide range bar. So, you can consider it. It's far enough away where it shouldn't get there, but when patterns like this fall apart, ugly things can happen. So that's what shock patterns are about. The unexpected has occurred. And let me continue here. Qs, inside day, nothing happening, chop, chop, chop. And doing better than the others, but pulling back here. So this has been doing better. You can see yesterday was just chopping around day. The Dow going nowhere, going down as well, but within that range. So, intraday price action, but running in place on the daily chart and on the weekly chart. Bitcoin, I think that's moving up. It's up a bit. It hasn't taken out a prior. Well, this took out a prior bar's low, but it's not the super high probability pattern that we'd really like, with some type of larger corrective type of price action that would make it a no-brainer. That being said, it's strong, but the buyer's there. Bitcoin just continues to be messy. I do like this type of, it's not the tightest, but it's type of a bull flag where, I mentioned yesterday how we read momentum slowing down. We don't need any indicators. Let's just look at the difference between the pivot highs. And then after it makes a pivot high, how soon does it create a red bar, a corrective type of a bar? The closer they are together, it tells you that momentum is slowing down. And so, and then it's chopping around here. And so bullish price action after making a new high. And it is a little extended, but no one's, running away. Oil, coming in from the prior pivot high there, normal. Maybe that could be a little bit of an effect of which pulling equities in a little bit here. So that was up over 100, the YM earlier. So gold consolidating at resistance. So maybe it's going to finally get moving here. So a little bit of a correction bar. It's doing well, right? So it's what we call so far bullish price action at an area of resistance or supply. It's not pulling back. When it tried to dip, buyers stepped in again. Ideally, a few more days going sideways, but you can see how it's staying in the upper half of the wide range bar. So we like that type of price action. Silver, this just might be the outperformer. I mean, it's in a downtrend. It's down near the support. Bullisher, maybe Thane. And it has been weaker, but it's got the void. So gold, it's going sideways there. I think maybe they can both move in lockstep where silver didn't. really move very much the last time gold bounced from here. So maybe this is a situation where they both could move. But this pattern is also, within a downtrend, but bullish in that, look, it dipped down and came back up. The price action is at the top. So far it dipped down and it came back up again. And so you can trade this, you can trade SLV, you can trade AGQ? We talked about this yesterday in the room. So rather than SLV, do the the leverage ones, and you can see like a 1, 2, 3, 4 type of a pattern. It's kind of thin, but it's an ETF. Should be fine. Right? And well, still waiting to see if transports can get moving here. Right? So they had a little bit more of a corrective day, but still within this bottoming pattern. Interest rates, a little bit of a turn there, 1724 down, 1325. Yeah, so the markets aren't liking this fact that, I mentioned this head and shoulders pattern, and financials don't want to see this moving lower, and it is, and I suspect that is what is, pulling this market down from its pre-market highs. Keep an eye on this, and breaking down below these levels here, you're going to see the banks get under pressure, and that's going to hold, SPX from moving up. It doesn't necessarily mean that tech won't go up because it's been the strongest, but we like to see everything moving together. That's where you get the more powerful moves. Yeah, and WM even more. Yeah, it's coming in after taking out the highs. So, traders are a little jittery here. So be careful. As always, trading plan, money management's the key. Survival. All yours, Dan. Go ahead, Dan. I'm going to post a few links in here for MT Live and
all right, good morning. Yeah, gaps today, like you said, wonderful topic. We focus on them every single day, both with zero DTE and trading the stocks, obviously. So yeah, we gapped up today. And the ADP number came out. And the news was saying, oh man, they really underperformed. This is a horrible number. And so I'm watching the markets to see the reaction. And it just did absolutely nothing. So this pullback, I don't know if it's like Greg said, yields or whatever, or delayed reaction. But yeah, I'm coming in here, which is fine because we're still overall bullish. This would be a perfect place actually to hold right here. Pull back to minor support. All our opens are fine. Let's see, Netflix down $1. We got a put spread on that. Everything looks fine. Nike up a little bit. We have a call spread in. We're short low G, short long PDD, or short PPG, but I can't tell where it's gapping. Yeah, definitely, Roger. But the entry is over yesterday's high, so it hasn't traded over that yet. 152.80, unless I typed it wrong, did I? You're making me check, Roger. 151.80. Wait, 152.80. Thank you, Roger. I was off by $1. All right, because yeah, it's yesterday's high. ideally, it won't hit for 30 minutes. And then it can, prove itself. It can prove itself that it doesn't want to go down, and then it consolidates at resistance. RBs. Yeah, RB, yeah, we have, yeah. And I should have put a note on this, folks. A typical 1, 2, 3, we enter over the higher of the two bars. But think about this. If you have a wide range igniting, it's actually okay to buy over the high of that wide range or on an intraday pullback, bullish one. And so this inside bar is actually our bullish pullback into that WRB. So I am making an exception, and we do it sometimes. We based on the intraday pattern where we say it's okay to get in early. Why? Because the weight of the evidence says it'll take it out. So why not get in early? PTMN. It's too low volume for me. I don't like the way it trades, but yes, it is a 1, 2, 3 from a base, so it's over the WRB's high. Looks fine. Amazon, John's asking, does Amazon still have room? Yes, it does. Your ideal entry was last Friday, a little gap up, pull back to support. That's another good gap example. It gapped up over 3 bars, and see the bottoming tail. I guarantee you, I'm not going to do it now, but if we drop down to a 15-minute time frame, I guarantee you I could have pointed to where we could have got on board near the bottom of that tail. It does look higher, but the question is, what time frame are you trading? We don't enter after 4 bars far from the 20 range expansion. If you're trading the 15-minute chart, well, maybe 30-minute high. Let's see what the Qs are doing. Stop days low if you're buying the 30-minute high. John, Zoom still look weaker for call spread. No way, John. We talked about that in the green room. Something that gaps this big, I would be afraid of an adverse gap risk. You're better off directionally shorting it as a day trade, or by swing. But I'm just afraid of the unless you're telling me it's $350 call spread. But I seriously doubt you're going to get premium for $60 away. He's in YouTube, Joe, is why. We broadcast our pre-market review 9 to 9:30 and take questions there too. Yeah, AMD broke out and pulled back and it's holding, and it's a bullish 15. So yeah, 30-minute high. That looks like a great. That looks like a great day trade, 30-minute high, sure. Falarin win, yeah. I gave this big list. Here, Greg, if you want to post this whole list.
Do what then?
Here, I was going to say, here's I got a big old bullish list here if you want to post that. In YouTube.
Sure.
So Falarin's asking about flowers, and that's the first one on my list that I gave to our subscribers. Yeah, flowers is a 1, 2, 3 after a bear sandwich, after what we call a bear gap that bullies with a price void. So yeah, I like flowers over yesterday's high, sure. Actually, let me run. Let me kind of take a quick peek at all these. All right, so there's flowers, yesterday's high. Uniform. What's jumping out at me is the weekly. Look at that beautiful 1, 2, 3 on the weekly with a price void. So now we monitor entry on the daily. Infi, same, if it closes here. 100% retracement, void up to 450. Yeah, folds on my list, Austin, the weekly, but I really want to pull back on the daily. It's come in a lot. I mean, it's risen a lot. Apple, we talked about, like GRWG, 30-minute high, price void, high or low. So this is just trading a bounce and a downtrend. KWeb. KWeb, look, I mentioned this on Monday that I love this tail reversal on the 20. This looks fantastic. Price void. This looks like, to me, it's going to the declining green 50 MA. A win. Remember, we were talking about win and LVS at the lows, greater than 100% retracement, going sideways, price void, easily to 110. I like that 30-minute high a lot. I have it in the bottom right window here. SKLZ, gap's too big for me now. Run, we need a pullback. We'll come back to you. TWOW is not a gapper, but it's just a W bottom we posted yesterday. Walmart, if it can get over yesterday's high, it was just a